Most people treat the financial markets like a casino. They open a chart, see the price moving up and down, and just guess. They think trading is a game of luck. But what if I told you that real trading has absolutely nothing to do with luck? Real trading is about reading data. It is about understanding the logic of the market, identifying where the big banks are putting their money, and simply following their footprints. If you think trading is a get rich quick scheme, this video is not for you. But if you want to understand the real mechanics of the global markets and learn a high income skill, you are in the right place. Welcome to the ICT FunEdge. My goal here is to give you the financial edge by simplifying market structure and smart money trading concept. So let us start from zero. What exactly is trading? In simple words, trading is the act of buying and selling an asset to make a profit. This asset could be a share of a company, a cryptocurrency like Bitcoin, or a foreign currency like US dollar. The core concept is always the same. You want to buy at a lower price and sell at higher price. Let us look at a real world example to make this easy to understand. Imagine you are traveling from your home country to the United States. You go to the currency exchange and buy 1000 US dollar. At the exact moment you just made a trade, you exchanged your local currency from US dollar. Now imagine you cancel your trip, but over the next few weeks, the value of the US dollar goes up in the global market because of economic news. When you go back to exchange those $1000 back into your local currency, you receive more money than you originally spent. You just made a profit. That is exactly what we do in online trading. But instead of physically going to a bank, we do it from our laptops in milliseconds. We buy an asset when we believe the data shows it is undervalued, and we sell it when the price rises. Now here is the secret that separates professional traders from the rest. The millions of retail traders, regular people like you and me, do not control the market. The market is controlled by massive financial institutions, hedge funds, and central banks. This is what we call smart money. When these institutions enters the market, they buy and sell in huge amounts. These massive orders leave footprints on the price chart. Here at the ICT FunEdge, we focus on finding those footprints. For example, when the institution buys heavily, the price shoots up so fast that it leaves behind gaps in the chart. The price will almost always return to fill that gaps later. As a professional trader, you do not jump in blindly. You wait patiently for the price to drop back into the specific zone, and then you buy exactly where the banks are buying. You are using historical price data and logical setups, not emotion. But knowing how to read a chart is only half the battle. To actually survive in this business, you need strict rule. Rule number one: risk management. A professional trader never risks his entire account on one trade. You should only risk 1 or 2% of your capital per trade. That way, even if you are wrong, you are safe. Rule number two: be systematic. The market does not care about your feelings. You must follow a strict logical system, just like a computer algorithm execute code. Rule number three: patience. You do not need to trade every single day. You only trade when the data gives you a clear signal. Trading is not magic. It is a skill of reading data and managing risk. If you are ready to stop gambling and start learning how the smart money really operates, make sure to hit the subscribe button and join the ICT FunEdge community. In our next video, we will dive into the chart and look at how to identify market structure step by step. Let me know in the comment what is the most confusing part about trading for you right now. Thank you for watching ICT FunEdge, and I will see you in the next video.